Hey everybody, welcome back to another live Sunday Night Live. Appreciate everybody who joins the lives and has conversation over here on the channel. Um, if you're new to the channel, don't be scared to subscribe to the channel. Also, if you watch the replay, put in the comments where you are watching from. How did you get over to the channel to join us in conversation? And then also don't forget to like the video if you are on a replay and there is a shooting star underneath the video. It's called a hype button. Also, don't be scared to hit that hype button. It helps to push us through the algorithm so people who are enjoying conversations as such will be able to find other YouTube channels that talk about the same topics. So let me just make sure before we start that everything's coming in clear enough so you can hear, and then we'll jump right into the video. Just make sure we can hear everything. We'll jump right into all right, so nice and clear. So just in case we don't have a lot of guests today, we'll be able to they can watch on the replay without any hey dad, what's going on, without any audio issues. All right, hold on one second. All right, so as you guys can see, the name of the title is Mortgage Rates Spike, Housing Market Trouble, question mark. So we just want to kind of analyze, see what's happening, what's going on, and your market and the current real estate market in Georgia. Hey, what's going on, Ms. H? Thanks for joining us here tonight on this Sunday. Appreciate you. Hopefully you're having a wonderful week and day. And okay, so before we jump into it, we're going to visit the mortgage rates real quick so we can check that out. And I'm going to try to take some of this stuff out of here because my computer is buffering slow. So I'm pretty sure since I'm buffering that I'm probably freezing. We got to figure out another way where I don't always freeze when I come on here. All right, let's check out the mortgage rates real quick. Mortgage rates. And I'm pretty sure you guys might have heard already, but if you haven't, mortgage rates have gone up. Uh-oh. Let's see. Let's share that. All right. As of, is it not sharing? It's not sharing. Oh, there we go. I'm having a delay on my end, so please work with me, guys. I might be also possibly freezing on the other end because there's a delay on my end. So I appreciate everybody being here, even with the craziness with technology. But as you guys can see, according to Mortgage News Daily, when it comes to the mortgage rates, they have gone back up. The 30-year conventional fixes at 6.65, 15-year conventional is 6.10, jumbo is at 6.69, 30-year jumbo, sorry. ARM is 6.49, FHA is 6.7, and the 30-year VA is 6.19. What is something loaded? Python framing. I don't know what is loaded. Something's loaded on my computer. So as you guys can see, like I said, the interest rates have jumped back up. They have spiked due to the conflict going on, the uncertainty in the economy, different things happening, layoffs, all those different type of factors are factoring into why mortgage rates have possibly jumped back up. So if you are currently looking to buy a house, if you're in the market to sell a house, just do things accordingly that make sense to be able to either one, get out of your house as quickly as possible if need be, or two, if you're trying to buy a house, you might want to circle back around to your lender if you recently got quoted a different interest rate and just see if you still fall within that bracket for that interest rate that you got recently quoted. And if you don't, you want to make sure it doesn't mess up your loan amount as far as what you could receive loan-wise. So let me stop sharing that. Let me see. Okay, let me get rid of some of this stuff because my computer is moving very slow. All right, so now let's jump into, I'm going to take some of the stuff off my screen, you guys, real quick, just so my computer is starting to freeze. And let's talk about what this article is saying around real estate news. Says mortgage rates jump as inflation reality sets in. So, all right, we got it big enough. As you all know, we kind of talk about this almost weekly, I feel like now, in regards to what's happening, but just want to keep you guys up on this housing market. It says, with no end in sight for the Middle East conflict, Iran Investors are growing increasingly nervous about how sky-high energy prices are impacting the U.S. economy. The U.S. economy's inflation situation seems to kick in with investors on Friday, and that's bad news for homebuyers looking to lock in a 30-year mortgage. So if you guys don't know, the investors are basically the treasury bond, right? So investors have started, I believe, pulling out of the treasury bonds per se, causing the 10-year treasury to hike up, and in turn, the mortgage rates hiked up. So I'll show you guys the 10-year treasury. Well, it kind of states it right here, but it says mortgage rates climbed again. The 10-year treasury bond, typically the bench for mortgage rates, surged to its highest level in a year, hitting 4.59 in early afternoon trading on May 5th. The 30-year fixed mortgage rate, 30-year fixed rate mortgage tends to be 2% percentage points higher, with Mortgage News Daily, which we just read, pegging it at 6.62. So again, as you guys saw, it actually went up to 6.65 now. Both have been sensitive to oil prices, which ticked up again on Friday. Stocks also fell around 1% in early afternoon trading. Mortgage rates were relatively stable earlier in the week, despite an ugly inflation report that showed prices rising 3.8% in April compared to a year ago. Wages are not keeping up with inflation, the report found, which means consumers are losing purchasing power. Rates could have been even higher were it not for the ramp up in purchase of mortgage-backed debt by Fannie Mae and Freddie Mac, according to Matthew Graham. As you guys know as well, we discussed this before. When it came to Freddie and Fannie Mac, the Trump administration advised them to buy $2 billion, I believe, in mortgage-backed securities in regards to trying to, I guess you can say, level off per se the mortgage rates, or kind of cool them down per se. And so, hey, what's going on, Kotexita? Bonjour, bonjour. So there's been like a lot of manipulation going on again. As you all know, our government manipulates a lot of things. They don't tell us everything. If you feel like they tell us everything, then that's a little scary. They kind of hide things. They kind of leave out, important factors, key elements, and they just give you just enough, right? The more mortgage debt they buy, the better it is for mortgage rates relative to benchmarks like U.S. Treasuries, Graham wrote in an online post. Elevated oil prices expected to continue with this week's U.S.-China summit now over. Investors appear to be discouraged by the lack of resolution on in the situation in the Middle East and Iran, which is also to stretch into its 12th week. Many are now betting that oil prices will remain elevated for longer. I don't understand why people thought that this situation was going to come to an end in regards to Iran anytime soon. Typically, when we're in situations or conflicts like this, it's not a month or two situation, right? These things kind of carry out for a long time. I could be wrong because I don't dive deep into the whole conflicts when it comes to different I'm trying not to say the W word, which is WAR. But as far as these different conflicts that go on, I haven't seen one that only stretched a month or two. They typically stretch out longer. Thank you, Kotexita. Yes, I believe it is 200 billion. Yes, you are correct. 200 billion. So yes, I don't know why people thought that it was going to happen and then disappear in like a week or so. The Wall Street Journal reported investors also believe there is a 50% chance that the U.S. interest rates will end the year higher than they are now. So again, if anyone, as far as predictability, what they're thinking is that if you are in the market right now to purchase a home and you have been quoting a certain mortgage rate or interest rate, however they want to state it, you might want to have a conversation with your financier, your mortgage lender, your banker in regard to figuring out, does it make sense for you to purchase right now? Or does it make sense for you to wait out? Again, we don't know how long or how high these interest rates will, how long the Middle East conflict will last, but also how high will these interest rates go? Again, I froze on the screen, so let me know if you guys can see me. I'm freezing on my end, so I probably froze on your end. But the whole situation in regards to that, so it's going to be interesting. And then also, typically what happens, as you guys might know as well, typically when we hit certain points where interest rates start to go up higher, you typically will see a cooling of prices in regards to housing as well, where houses will start to lose some of their leverage and prices will decline. But what we're noticing now, or what I'm noticing, I should say, is that a lot of these houses are kind of staying steady and they're not declining in price. In fact, some people are actually increasing the price of their homes now instead of decreasing them. And you're every now and then you're getting a couple people who are starting to cut those prices depending on what areas you're in and how long it's been sitting on the market to make sense to get out. But now I'm noticing a lot more people coming and they're like, I'm not decreasing anything. So you have high rates, nobody's decreasing their price. And so it's almost like a sense of, if you want to say, a stagnant situation where nothing's moving. And so it's gonna be very interesting. Let me know your thoughts and how you guys feel. It says what this means for real estate. This rise in rates comes as the housing market attempts to get back on track after a sluggish spring start, but home buyers appear to be looking past the current market conditions with pending sales up in the recent weeks. Since elevated rates have led to an increase in use of home equity lines of credit, the HELOC, according to Kyle Bass, production manager at Refi, an online post, Bass noted that some homeowners are using this as an option to tackle home improvements while maintaining the ultra low rates they nabbed during the pandemic. This is another thing I'm seeing too, where people are doing HELOCs, they are refinancing as well. And what I'm noticing in this is that people are doing it, but then a couple months later, they're trying to put their house on the market to sell. So now you have an additional debt or an elevated debt. If you have a HELOC, you put out a home equity line of credit. So now you have a second, quote unquote, I guess you could say, mortgage on the side. And then also the refinancing. People are refinancing. So if you did have a lower rate, now you have a higher rate. And also you refinance for some money in the property. And so as far as like cash outs and all these different things that they're doing, and then a couple months later, these people are trying to sell their homes. So whether it is to do home improvements or whether it is that they possibly might have just got laid off and they're like, hey, I need some income to last me for the next 2 to 3 months while I try to find another job. And now in this current market, it's kind of hard to find a job within 2 to 3 months. It's taking people 6 months, a year, 2 years to kind of find jobs that are substantial as far as making sure that they can take care of their current lifestyle. If you have a mortgage, if you have car notes, if you have children, daycare. I actually had a colleague of mine send me an article over around daycare and how daycare expenses are actually hurting people as well. Student loan debt, if you are trying to pay off your student loan debt, you have all these additional expenses now that are kind of eating away at you. And so if you are, so a lot of people, you do see a lot of people refinancing and using their house as a piggy bank. That's what I'm noticing now. And I just want to tell people, be very aware of how you use the equity in your house. Do not use it as just a piggy bank to just pull from. You use it for to be very purposeful with. All right. Because I'm noticing that that's what's happening down here. People are refinancing, pulling money out, 2 months, 3 months later, putting the house on the market to sell, can't sell the house. Having to bring the price down now is going below what they might have refinanced, pulled out home equity wise, as far as trying to settle that second mortgage per se on the back end from the primary. And then they're ultimately having to short sell, they're foreclosing. A lot of people now are claiming bankruptcy as well that I'm seeing on the back end. So there's a lot of different nuances kind of happening on the back end that most people are not saying out front. And again, this is all different depending on where your market as far as real estate. Every real estate market is different. There's, home prices are still appreciating in some markets, while home prices are dwindling in other markets. And some people are still trying to get 2021, 2022 prices, even 2023 prices on their houses. And I'm also noticing the shift of a lot of people who bought within the last 3 to 4 years. And I think we talked about this before on several other lives. A lot of people who bought within the last 3 to 4 years are trying to sell their property as well. And now a lot of them are becoming accidental landlords, where they're not able to sell, but they have to relocate. Maybe something happened, maybe death in the family, relocation for a job, maybe downsizing, upsizing, depending on the family. And a lot of them cannot sell the property because equity is gone. The equity in which they bought the house for 3 to 4 years ago is no longer there. Most people are underwater unless you actually put some cash into the house, unless you actually, or if you bought the house prior to this, as I call it, this fake equity that kind of burst real quick. So it's a lot of different things going on in the back end that I don't feel like a lot of people are talking about. And then this kind of ends right here with the home equity. So I'll get rid of this. But let me know your thoughts, what you guys are experiencing. Let's check out the 10-year treasury right now so you guys can see. If you want to, you can go over to the 10-year treasury. There's actually several treasuries. It's not just the 10-year treasury they have. I believe it's like a 20-year treasury, different treasuries. But we use the 10-year treasury because most people typically, if you were to buy a house, most people move between 7 to 10 years. So a lot of people like to base that everything off of this 10-year treasury. But as you can see here, about almost a year ago in May, the 10-year treasury was at the same amount where it's at now, 4.5. My thing is buffering. And then as you can see here in the early 2025, we went up almost close to 5 in the 10-year treasury. But all right, so I'm gonna take this off the screen because my screen is buffering a lot. I don't know what's going on with this computer. I tell you guys, before I got on, nothing was going on. Now every 2 seconds, my screen is buffering, and it's stopping me from clicking on stuff and everything. Hey, what's going on, Lang? Thanks for coming tonight and tuning in and watching with us. Clark, is the Atlanta market really in that much trouble or having that many problems as being talked about? Lots of areas are having problems. It just seems it's always about Atlanta. So a lot of areas are having problems. Atlanta is having its problems, but the thing about it is that a lot of people are not talking about it. I still see a lot of my colleagues telling people this is it's still a great time to sell your house, still a great time to buy a house. Again, when you sell, when you buy, it all depends on you. I cannot tell you what's the best time to do what you need to do in your life, because people have to sell because of life circumstances. People have to buy because of life circumstances. So it has to be based around your life. But I always tell people, when to buy inside, make sure you're financially ready and stable to do so. And on the selling side, just make sure now, currently in this market, that you price your house accordingly to the market, because if not, it will sit and you will actually lose more equity in the house than if you actually price it correctly to be able to sell it faster. But there's a lot of stuff going on outside of just Atlanta. And Atlanta, is metro, which people don't, I think a lot of people don't realize that Atlanta is very small. So in Georgia, per se, of course, Georgia is a big state, but just in the Atlanta area, most of Atlanta is really around the perimeter and in that metro part. Atlanta itself is very, very small. It's just downtown. It's a city downtown. But around it, you have like College Park, you have Decatur, you have Brookhaven, you have Smyrna, you have South Fulton. That's what they call it per se now, as far as county wise. You have Clayton County, as far as Riverdale, Jonesboro, Stockbridge. As you keep going down south, if you keep going east, you have Lithonia, you have Covington, you have Conyers. As you go north, you have like I said, Brookhaven, Chamblee, Alpharetta, Johns Creek. You have all these areas. So it's not just Atlanta having the problems. I'm sorry that I always pinpoint Atlanta, Ms. H, but it's just that I'm seeing so many things going on. And typically when I'm talking, if I say Atlanta, most people figure like everywhere that they're in this perimeter of Atlanta is Atlanta, which is not. Like, you have people that live in Dallas and they'll be like, I live in Atlanta, or Powder Springs, or certain places they're like, or Austell or Mableton, they'll say that they're in Atlanta. So I just keep saying Atlanta. So sorry, I apologize. But Atlanta is having its difficulties, but not outside of that. There are others. Other cities in Atlanta, outside of Atlanta. Let me see. There are other cities outside of Atlanta that are having trouble. That I actually was watching this thing today. They were saying how like Atlanta was number 1 on the list. It was like the top 10 cities in Georgia that are having trouble. Atlanta was number 1. There was like Warner Robins, Macon, Augusta, Savannah, Alpharetta. So it's a lot of places having trouble right now. So, hey, Croy, how you doing? I'm doing good. I'm doing good. How are you doing? Hopefully everything is well. But I'm doing good. So yeah, so there's a lot going on in regards to that. Let's see. Let's read this article real quick. But people have to be very very cautious, very, very cautious as far as what you're doing, and really talk to a professional that's understanding the market is going to be truthful with you in this time period. Because again, as most people know, real estate is a sales field, right? Real estate, people helping you finance loans, all these things, these are sales field. So most people are trying to sell something to you. In America, like I said, like I've always said, America is a great marketing country. This country is a capitalistic country. It's based on marketing to people to create more consumerism and then create a confidence to people to make everything always seem like it's great. Everything is going great. Our economy is built off of giving you confidence to say, keep buying, to give you this confidence to say, keep going. Like they'll always tell you, like, you can do it, you can make it. And in reality, some people won't be able to make it. It's just the realism of life, you guys. And I don't want to be Debbie Downer, but it's just being truthful. And so that's the thing about real estate, right? You're always going to get people who are going to say, oh yes, buy a house, buy a house, buy a house. In reality, if we're in a certain market where things are shifting, doesn't make sense for you financially. Doesn't make sense for you to buy a house. Doesn't make sense for you financially to sell a house. Like I even had a colleague that I went to look to. We went to somebody that she was going to help them list the house, and we sat down and we ran through the stuff. And financially, it didn't make sense for them to sell their house. They only owed about, I think they only owed about like $50,000 left on the house. They felt like their house was worth $500,000. It wasn't worth $500,000 because it wasn't in great shape, right, compared to the comparables that they saw. So it was only worth about like $250,000. And then they also owed, because they had recently got work done from Habitat for Humanity, which is a great organization, but Habitat for Humanity puts almost like a forgivable lien on the property for 5 years. So you have to live in the house for 5 years. After 5 years, it'll be forgivable. And they put in like a new HVAC and a new roof, I believe, on the house, but they still owe that. And it had only been 1 year in since they got that done by Habitat. So they would have to pay that as well. And then going to buy a house in this current market at 6% interest rates did not make sense because the return is not going to be what they thought it would be. So now you're left with a mortgage, a higher mortgage compared to something that you don't have currently. It just doesn't make sense. So it's about factoring everything else out. Like I also had got a phone call. Actually, I got hit up on my TikTok. I'm not on TikTok no more as frequently, but I got hit up a couple months ago on TikTok by a young lady who was trying to buy a house. And I had looked everything up as far as her house, and I saw that she was listed with another agent to sell her house. So I also asked her, like, well, why not use the agent that's selling your house to buy another house? And I realized that agent, all he did was sell houses. He didn't help people actually buy on the other side. It was almost like one of those things where it's like, we'll buy your house and sell your like for cash, or we'll buy your house or whatever, or help you sell your house, whatever. And so with that being the case, she bought a house in about, I think it was like 2019 for about $90-something thousand, but now she's selling it for $149,000. So when I talked to her on the phone, she was basically saying, I was like, well, what are you looking for as far as mortgage wise? What are you trying to be at? And she was like around 1,000 or below. And I had to blatantly tell her, I'm gonna be honest, in this current market and where we're going real estate wise, I don't see anything that you can get less than 1,000 in this metropolitan area of Atlanta, unless you shift down to like the Macons or down to like the Warner Robins or possibly the Perrys, that central or middle Georgia area, right? But she needs to stay close to this area because her job is here. So it's like the conversation should have been had with that particular realtor or that company that was selling her house to say, hey, I think even though you might want to move out of your house because X, Y, and Z, or you want to shift, it doesn't make sense in this particular market because you're not going to be able to buy another house. So now basically her house is sold. And I had asked her in the midst of that too. I was like, where are you going to live? Where are you living? And she had told me she would, she might be able to live with her daughter or whatever. But I'm like, now you're out of your own house. So it's just like these conversations and these situations happening that I'm noticing, and it's a lot of them. Like, again, all of what I talk about is based off of experience as well, outside of course, reading these articles and things. And I just pull some of the information that might that's relatable to conversations I'm having, experiences that I've gone through as far as real estate. But it really needs, these things need to be talked about before you go and buy a house, before you go and sell a house. Where are you at financially? Corey said, yes, I'm good. That's good. Good. I'm glad that you're good, Corey. I'm glad you're good. So it says Americans, so let's talk about this real quick. It says Americans face unexpected opportunity after housing market shift. Let me see. It says the 2026 housing market has given buyers, real estate investors an edge, according to the industry expert. The housing spring market is typically the most active stretch of the calendar when listings surge and buyer demand peaks. In 2026, the seasonal pattern has been anything but reliable for Americans hoping to make a move. Like, a lot of people put their houses on the market in spring, and I've seen this happen a lot around Metro Atlanta area, where people are actually that took their house off the market several months ago or a year ago. They put it back on the market again for a higher price. They're putting it back on the market now at a higher price because they're like, oh, it's the spring market. People typically have higher prices in the spring market. People are typically buying in the spring market. But now we're seeing where it's not moving. The houses are not moving as quickly as before. And this is in Metro Atlanta. It might be moving, according to other people that I talked to in different states, it's hotcakes. It's hotcakes, y'all. In Metro Atlanta, you might get every now and then rare if a house pops up on a subdivision that people might want to be in, that you might get it where you'll get one or two offers on a house, but I haven't seen it in a while. I've even, from other colleagues I've heard, and personally with myself, I've been seeing even appraisals coming in lower in the Metro Atlanta area. I've been seeing appraisals coming right on the purchase price. Or if stuff is appraising a little bit above, you might only be getting $4,000 worth of equity. So that big burst of equities and trying to overbuy houses, please, people, do not overbuy a house. Make sure you're doing, especially Metro Atlanta, make sure you're doing those comparables, understanding what's happening in the market, because you're not gaining equity. Like I said, a colleague of mine had a client that was trying to purchase, and as this investor came in and they flipped the house, they overpriced it at $450,000. The appraisal came in at $400,000. It was $50,000 over price, and they were trying to figure out how to create a, because the client still wanted the house. But the investor, the seller, was like, well, I'm not lowering it. I'll lower it to $430,000, but I'm not going to lower it at $430,000. But so you would have to pay the appraisal gap. Please do not pay an appraisal gap right now, depending on where you're at. If your house is appraising for less than what it's worth, and if we're in a current uncertainty economy that we're in now, you might lose a little bit more equity because we don't know where the floor is at. And of course, yes, real estate appreciates and it will rebound, but it's like, how quickly will it rebound? And then you don't know the uncertainty of your current life. We're human, you guys. Life changes every day. Situations occur every day. A medical situation can happen to you. If you have children, something can pop up for your child. Your car could break down. You could lose your job. Like, all these different things are occurring spontaneously throughout our life every day. So we don't know what's going to happen. So why take the risk of buying a house that has already appraised for less than what the person put it on the market for, to turn around to be uncertain of where the floor is at as far as your equity and appreciation, to then try to wait it out 10 to 15 years down the line where you don't know what's going to happen tomorrow. Like, I know everybody say you can stay in your house and you can buy it now, and 20 years you can sell it. Yes, some people will be blessed to be able to do so, right? But everybody doesn't have that blessing to be able to do so, because life does occur. So I just say, be mindful of what you're doing, because there's a lot of different things going on, y'all. And like I said, I don't want to be the scare person, the Debbie Downer. I just want to be realistic with you guys as far as what's happening in this real estate market, and make sure you have these questions to a realtor you're talking to, whether you're buying or selling. Have these questions. See how in tune are they with your current market where you're located at. See what they say. It says mortgage rates have stayed well above the levels real estate investors and everyday home buyers grew used to before the pandemic, and home prices most major markets remain high. What would have typically been a busy spring has instead felt like a holding pattern. In May 2026 edition of the Bigger Pockets Real Estate Podcast monthly housing market update, Chief Investment Officer Dave Meyer detailed how the spring housing market is starting to shift in ways that buyers and real estate investors may not have expected. The shift, while suboptimal by certain metrics, is creating opportunities. Days on markets are climbing, sellers are cutting prices faster than expected, and a window for buyers' leverage has quietly opened. So they're saying now that in some markets, you're seeing those sellers cut those prices. Like I said, in the Metro Atlanta area, we're seeing some sellers where they ain't cutting nothing. Like, they're holding steady. They're not trying to cut. And then you do see other people cutting what I'm noticing is that you are seeing more of these hedge funds and corporate investors like, okay, slash these prices, get them done. And then you are seeing some local mom and pop investors who have done a fix and flip, and they're slowly cutting because again, they're trying to create certain margins. But then also what I'm noticing is that we are in the situation now where everybody is expecting to get six figures out of every house that they sell. And I'm not saying that you as a home seller shouldn't receive as maximum profit as you can, or an investor or whatever. However, we also have to understand if the market is shifting down, why do you expect that you should be the only one out of the whole block that sold their house to get six figures or more when everybody else might have got, let's say, five figures? And even back in the day, you know, when people used to actually buy and sell real estate, people were not, their minds were not set to always walk away with six figures. Their minds were set to say, hey, you know what? I'm gonna flip this house. I bought it for 100,000, let's just say, and I'm gonna put money into it, put some work into it, flip it, sell it for 215. I'm okay if I walk away with 30,000, 40,000, 50,000 at the most. Nowadays, everybody's mindset is I want to walk away with $500,000, or I want to walk away with six figures. Like, we have to reshift the mindset, because if we don't, you'll have a bunch of houses sit longer, a bunch of them fall into foreclosure or pre-foreclosure status. And this time around, I don't foresee these institutional investors, these corporations, I don't foresee them buying a bunch of foreclosure properties in certain areas, because taxes are higher now, home insurance is higher now, and especially in the state of Georgia, if you don't, if you're not a home occupier, you as an investor, you don't get those tax exemptions on the property, so you're paying higher taxes. So somebody that's a home occupier could be paying $3,000 a year, and you as an investor could be paying $5,000, $6,000 a year. And because of the way the market is shifting, you're now having to lower your rental rate prices and your home insurance. You have to have a certain type of home insurance because now you have another person in the house, so you have to insure it accordingly. With these taxes, you're not making any return. And to be honest, you guys, because I worked in the sense of investment with real estate, your cash flow, unless you buy a house fully cash, typically is not a large cash flow. You're not making thousands of dollars a month with cash flow. And then you're putting money aside for maintenance, right? Because if you see yourself renting this out in the long term, most times you're going to have to make sure you maintain the property for health and safety concerns in regards to that. So it's not making sense. So you're seeing people, corporations kind of slashing prices. So the shift, let's see, it says, with the rate volatility, geopolitical turmoil, and a general sense of economic uncertainty, the housing market isn't following its usual patterns. So again, if someone says, oh, the spring housing market, blah, 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 really dig deeper into what's happening in your area, because the pattern is not the same as it used to be. We're in a different situation and scenario right now. It says Myers in Friday's episode, but that does not mean that it's all bad. In fact, there are a lot of silver linings emerging in the housing market that the real estate investors should be paying attention to. Yes, there are silver linings in every situation. So in this point of view, there are. But again, do you have the funds to be able to jump into the silver lining moments, right? Because there's always going to be winners in every market. Right now, if you guys don't know, right now we're in an economy where if you're wealthy, this is the best time. You're able to buy assets that might be, depreciating. You might be able to, as you guys know, the stock market is just going off the hook. People are just buying. I don't know if it'll ever burst or not. But in real estate, most people who do have the money, these bigger investors, these people who have cash, they are buying stuff cash. Or they're getting in and they're going in, doing some negotiations and able to buy stuff cash and lower than what people might have bought it a couple years ago. So there are some silver linings and everything, but again, do you fit within that silver lining? Do you have those accessible funds to be able to jump in to make it make sense to you to buy something on the low end? As you guys know, even in stocks, you buy low, you sell high, right? People got lucky who bought prior years before the pandemic happened, they sold high. A lot of people started selling their houses, and a lot of them sold, and then they went and they rented. And a lot of them sat on the sideline like, okay, I'm going to sit on the sideline. I sold my house. I'm selling on the sideline. I'm going to rent. And then I'm going to possibly get back in and buy another house, waiting for the market to cool down. The problem is that the market is starting to cool down, but the rates haven't gone. They're not down. And everybody is sitting on the sideline too, expecting that we were going to see rates fall back down into maybe the 5s, the 3s, the 4s, and instead it's going the opposite way because now we have so much conflict happening that is actually going up instead of down. So it's very interesting, you guys, very interesting. It said, at the center of Meyer's update is one of the that captures the shift now underway. Days on the market have climbed to 43, the highest level in several years. Meyer was quick to put that figure in historical context. Before the pandemic, the average time for a home going to contract was closer to 2 months. During the frenzy stretches of 2022 and 2023, that window had collapsed to as little as 7 days in some markets. Yes, there were some days you put a house on the market during that time period, it would go in a day. And you have all these everybody trying to bid because everybody told them. It was this FOMO thing where everybody was trying to get in and buy because they were being told by real estate agents, by people in the media, oh, house prices, they're just going to keep going up. They're going to keep going up. Real estate is going to keep going up. So everybody had this, they were kind of being fear-mongered into like, oh, I need to buy a house now because if I don't buy a house now, I'm not going to be able to get into the housing market. And so because of that, you had a lot of people, you know, let me see, sorry, y'all. You had a lot of people fear-mongered into buying. And so people jumped in because of that, wanting to have ownership and own something. And now a lot of these people who jumped in are actually trying to get out. That's what I've been noticing. The phone calls that I've been getting, the emails I've been getting have been people who bought within the last couple of years, 3 to 4 years ago, that are like, I need to get out of my house. The taxes are too much. Things are happening, occurring. I recently lost my job, different things like that. And so people are trying to shift. And it's hard right now because a lot of people in this Metro Atlanta area, they're underwater. We're seeing more short sales occurring, even though they're not reporting it. And again, it's different in every area. But in this area, I'm seeing short sales occurring. I'm seeing a lot of pre-foreclosures popping up. I'm seeing a lot of bankruptcies occurring on the back end where people are doing bankruptcies claims. And what these bankruptcies claims are doing now is that they're coming after people's assets, which are their houses, they're making them sell them in the sense of the bankruptcy claims. So, and meanwhile, you know, I even went to, meanwhile, people are moving as if nothing's happening, which is crazy. But let me know how you guys feel. Again, I don't want to be a Debbie Downer, but that's just what I'm seeing. What has also shifted, Meyer said, is how sellers are responding. The change in one he attributes to a broader reorientation in seller psychology. And while Meyer admitted it's been unexpected, the opportunity is easy to understand. People are cutting their rates and prices faster than I would expect, Meyer said. Sellers' brains have sort of been reoriented to now to think that if their property is sitting on the market for 2 or 3 weeks, all of a sudden it's going to go stale. He said, at the same time, demand has not collapsed the way many feared. Meyer noted that mortgage purchase applications are up 5% year over year. Pending sales are up 8% year over year. And so there's another thing with the mortgage applications. Again, people have, when the mortgage rates kind of dwindled down, people stepped in the market, right, to see like, okay, how much can I qualify for and what would possibly be my monthly payment if I was to buy a house today? And so people were going in and they were just inquiring about mortgages, right? But every person that acquires about a mortgage is not going out to buy a house. So even if mortgage purchases go up, you know, 5% year over year doesn't mean everybody's buying a house. Also, some of these mortgage purchases could possibly be refinances. People are trying to refinance. And right now what's happening too is that people that are trying to refinance, if you bought at a 6.5, you ain't going nowhere now. We didn't went back up in mortgage rates, right? So we don't know the context, the full context behind mortgage purchase applications. It's just saying it went up 5% year over year. Okay, to what capacity? And then those people that did inquire about purchasing a home and trying to see mortgage and getting these mortgages, filling out these mortgage applications, I should say, did they actually go out and purchase a home? And when it says pending sales are up year over year, yes, great, sales are up. But again, what are the nuances to what capacity? Because again, just because something is pending does not mean it's going to close. I've seen numerous sales where they've been pending and they fell out of contract. Like I literally just recently saw a house that so in 2024, I helped a seller sell their house in Marietta. The buyer bought the house and that house is now up for sale. They were recently under contract. They did an active under contract, meaning that there probably was a contingency or something put in place. That's why I was actively under contract. And with that being the case, I just looked before I even jumped on this live to see where they were at. They are now fell out of contract and they're active back on the market. So just because something is pending as a sell does not mean it's fully closed. What we want to see is we want to see year-over-year data of closed sales, not pending sales, not applications being filled out mortgage-wise. We want to see closed applications. We want to see closed sales so that we can actually see how the market is shifting. This pending, this mortgage purchase applications, we need the hard data. We need the end of the road data. We don't need the middle of the road data. But to each his own. That's just my saying for that. Additionally, he added Google search value for homes for sale has reached its highest level in 9 months, up 20% from the same point last year. Myers said those data points run counter to prevailing narrative that Americans have walked away from housing market entirely. Yes, people are online all the time searching to see what's happening in the housing market. That's just because people want to know what's going on, because they're being told one thing, they might hear something over here. So people are going to, Google what's happening in the housing market. I Google what's happening in the housing market because outside of Atlanta, I don't know what's going on nationally, right? So I guess I'll fall into the Google search. Kotex said AI was scheduled to take my job in June. They bumped it to August. Yeah, and unfortunately, my one friend just recently, their job was taken from AI. They just recently got laid off. So we got to be understanding what's happening, right? And I'm sorry to hear that as well, Kotex Sita. Hopefully, you'll be able to successfully retire, get that pension or that 401k and all those good things, or they can shift you somewhere else where you can still be able to finish out your before retiring on your job. Ms. H says sometimes it's okay to just walk away. When you are younger, give back to the bank, walk away. Someday start over when you're able. There is no shame in doing it. I agree, Ms. H. I tell people it's no shame. It's no shame to walk away. It's no shame to claim bankruptcy. I think people have fallen into this narrative that it's very shameful to do so. Like I said, I have seen multiple amount of people on the back end file bankruptcy. It's okay to start all over. The wealthy people, they utilize bankruptcy all the time to reorganize their debt. The one thing I can say is that it's life. There's always going to be ups. There's always going to be downs. It's called the circle of life. Even when I had the conversation with the young lady I was working with who had to unfortunately give her house back to the bank, we had this conversation on the phone, right? And it's not your fault. Things happen. What occurs in your life is not your fault. Well, I don't say everything's not your fault. If you created something, it's your fault. But 9 times out of 10, but usually if something is going on around you, it's not your fault, right? So you can't feel like, don't get hard on yourself. Don't feel like you can't, don't feel like you put yourself in a bad position. Don't feel like you can't restart your life over. It's okay. Sometimes things happen, things occur, and you gotta reprogram and rewire and start from the beginning. And it's all right. Don't allow yourself to get caught up in a narrative that you can't, like Ms. H said, get the house back to the bank, walk away, start all over, do it all over. You can go rebuild your credit all over. You can, do all those things to get back to where you ultimately want to be, and you'll probably come back 9 times out of 10 stronger than what you were before. She said, I think after 7 years, it's not against you when you want to buy again, walk away. Yeah, there is a time period where you can buy again. I've actually had a conversation with somebody who had filed bankruptcy before, and they actually bought a house like 3 years after they filed bankruptcy. And like the next month they bought a car. so yeah, I don't know. Kotex Caesar said, now they already did layoffs. We'll see what they do with me. Yeah, people are definitely getting laid off. Like I said, I have several friends who have gotten laid off. So things are happening, you guys. Whether people want to believe it or not, whether the media is saying certain things to people or not, things are occurring. So you want to make sure you're in a good situation financially. And I think I've talked about this several times on my lives. Like my whole goal has been the last year per se was to like pay my debt down. Like any debt that I have 2 credit cards that I have to fully finish paying off. Now I have a new car note. Before, if you guys have been around the channel, you know that I didn't have a car note last year, but then my car started acting up with my transmission. So I had to get a new car. So now I have a new car note, but I had paid that car off. So I had no debt there. And then of course I still got student loans that I have to fully get paid off. But the whole mission now is pay off the debt, do not accumulate extra debt, you know, different things that don't make sense financially, and this in the way that this economy is shifting. And that's like my biggest thing too with talking to people that want to purchase homes or sell homes. More of purchasing right now. It's like having this conversation about like the finances, and I don't want people to feel like, oh, Devon don't want me to get a house, or Devon don't want. I'm like literally trying to make sure you don't foreclose on your house. I'm trying to make sure you're in a good financial situation. I don't want you. And again, you're gonna do what you want to do. You're gonna do what you want to do because people do what they want to do. But I personally am not a person trying to set you up for failure. So because I don't want you set, I don't want to set you up for failure. I'm not. If something don't make sense, I'm like, look, this doesn't make sense, you know. And I'm gonna keep asking you the questions. I'm pretty sure most of the clients that I work with, they'll tell you like, Devon, keep asking me about, can I afford this payment every month? I do. I just be like, can you, like, are you okay? You gonna be all right because of this, because of that, you know? But again, I gotta let people do what they want to do ultimately, right? I think we tackled this a little bit last time as well on the live about foreclosures. Filings are up 18% year over year. This article is by Phil Hall. It's from WRE News, and it was published May 14th, 2026. So this is recent. I think we might have touched on this a bit on the last live as well as foreclosures. Again, this is across the whole country. So technically, it's a small percentage. However, this is also something that we need to pay attention to in the real estate market. How is this percentage? What is the uptick? Like, what's happening? You know, be very mindful of what's happening around you if you're currently trying to buy, because some of these properties are foreclosed properties. Again, some of them are bank-owned properties. Some of them are corporate properties, depending on where you live at. And you might be able to, if you are trying to buy, you might be able to negotiate a deal that makes sense where you're not overpaying for something if you're currently trying to buy in this housing market. But you just got to structure the deals correctly. You got to understand the financing tier as far as how realtors put stuff in place. Though, do I feel like they should look at it this way as far as financing tiers when it comes to purchasing? No, but a lot of realtors look at it like this, where it's cash is at the top. Underneath of cash is conventional. Underneath conventional, you then fall into like FHA. Underneath of FHA, you then fall into like VA, like USDA or VA. And that's how realtors look at it, even though they're not supposed to be looking at it like that. They're supposed to be making sure they give all the offers to the seller. The seller then looks at everything, and then in turn, the seller figures out what's the best way for them to take the offer. But some, you know, realtors will then have a conversation with the seller and say, hey, you know, it might make sense to go this way, this way, this way. And of course, ultimately, the seller has to do what makes sense to them. And I know everybody will say, well, at the end of the day, when you get to the closing table, it all turns into cash. However, because of the guidelines with these financing terms, some sellers might say, well, I know my deck is kind of falling apart and it's not completely, the wood is, you know, the paint is chipping, different things are happening. And so because of that, I know it's going to be required for me to fix it if I go with somebody that's a VA loan or a USDA loan or possibly a FHA loan, we might have to fix these things. And they're like, I don't want to fix nothing. I don't want to give, and they can't really give the money at closing because those requirements need to be done prior to closing. So then that seller will say, well, you know what? I'm not looking for people with that financing because I'm not fixing this. And so then they'll kind of fixate on the conventional loans or the cash purchases because cash, you know, they'll feel like, oh, I can close quicker with cash. The person's not looking, possibly not trying to appraise anything. They're not trying to get me to fix anything. They might just want some concessions, or maybe if they do want me to fix it, I can always do like an escrow somewhere else where we can then give it to a vendor at closing. They can take the cash, X, Y, and Z, right? So even if you're buying right now and you're coming into the market, you want to make sure you're making sense of your purchase and you're not overpaying. You also have to look at the way your terms are financing wise, because even though people shouldn't be looking at it as such, there are sellers who look at it as such, and there are realtors who, you know, break everything down to the sellers as such as well. So I just be mindful in regards to that. But if you are buying, you know, don't overpay for something that on the back end they're about to foreclose, because that don't make sense. To buy a foreclosure at market value, but meanwhile you can Meanwhile, you can get less. You can get it for less, right? So let's talk about these foreclosures. It says a total of 42,430 real estate properties carried foreclosure filings. Let me exit off this. In April. So we are in what, May? So January, February, March, April. So last month. And it says it's down 8% from the prior month, but up 18% from year over year. So again, understanding the month versus the years, as you guys know, year over year it's up, but even though prior to last month it was down 8%, meaning that maybe these people who got the foreclosure notices, they might have went out and possibly paid on, whether it's foreclosure tax wise, they might have went pay the taxes, whether it's foreclosure financing wise, as far as you're leaning against your house with mortgage, they might have went to the mortgager and said, hey, what can we do? The mortgager might have turned around, did a loan modification, put the money on the back of the loan. So you might think that the money, that amount that you didn't pay has disappeared, but it actually gone to the back. So maybe they turned your 30-year loan into a 40-year loan. Like, it's all these different things happening, right? Maybe some people filed bankruptcy to stop the foreclosure process. So that could be another reason why the foreclosure went down month to month, right? According from year to year, but it's up year to year. According to the data from Adam, 1 in every 3,388 housing units nationwide had a foreclosure filing last month. Delaware posted the nation's worst foreclosure rate at 1 in every 1,739 housing units with a foreclosure filing, followed by South Carolina, 1 in every 1,745 units, followed by Florida, 1 in every 2,092 units, Indiana, 1 in every 2,129 housing units, and Illinois, 1 in every 2,262 housing units. Lenders started the foreclosure process on 28,414 properties in April, down 6% from the previous month, but up 12% from year over year. Lender repossessed 5,098 properties through completed foreclosures, REOs. So as you guys know, REO means it's real estate owned by the bank. So at that time, the foreclosure has happened. So we'll run through the foreclosure process real quick. So you have pre-foreclosure, right? Pre-foreclosure is the person is not paying on their the loan. They haven't paid the last couple months. They get a notice as far as your loan is the payments are due, blah blah blah. If you don't execute X, Y, and Z, we're going to start filing the paperwork for the foreclosure to happen. So they give them notices, so they might pop up online, maybe Zillow somewhere. It might say pre-foreclosure because they've been warned or things have gone out. And then if they don't do it, they go into the foreclosure status. And so foreclosures are when they actually go to auction and they're being auctioned off. When they actually close on the auction steps or online, they are foreclosed. So until then, they're still in a pre-foreclosure status until they actually close, and then they're foreclosed. And then if they either get bought by someone or the bank takes it back. When the bank takes it back, it's called REO, which is real estate owned by the bank. After that foreclosure, the bank now owns it. And typically what happens with the bank is that, what I noticed, because this happened with my one client, with the bank tried to put it back up on an auction block to resell it, to auction it off. They didn't end up they auctioned it off. They got a certain amount, but they didn't want the amount that they got. So they actually end up taking it to a broker, because this is when sometimes the banks will go to local real estate brokers in the area that they do business with, and they'll say, hey, we have some REO properties that we're trying to unload, because again, the bank is not in the business of trying to sell real estate. They're here to finance, get the interest up front, make you guys pay back more than what the house is worth interest-wise, according to whatever your interest rate is. How it works in America is if you got bad credit, you always going to pay more interest compared to somebody that got good credit that's going to pay less in interest. It's crazy to me, because if I'm already in a bad situation, why the heck you about to make me pay more than somebody that's in a better situation than me? Because ultimately I'm going to default. But I think they know that. That's why they're trying to get more of that interest up from you up front, because they're like, okay, if you default, at least I'm gonna get whatever you paid me up front, and then on the back end, I'm gonna try to resell it and get whatever I can get on the back end. So at least it can kind of equal out, per se. That's what I feel like they'd be doing. And so with that being the case, they'll turn around, like I said, or the bank will turn around and they'll try to sell the property through a local broker. And in that situation, they try to sell the property through the local broker. And what they got on the auction block, they ultimately did not get on the back end with the broker. So it's set several months after it went up for auction. And then when they sold it, they actually sold it for less than what it was on the auction block. So it's a lot of things happening, y'all. Okay, so it says REO down 3% from previous month, but up 42% from a year ago. Foreclosure activity. I'm sorry about that. If I'm looking at my phone, one of my clients was texting me, so I just texted back. So I apologize with me looking down, you guys. Foreclosure activity continued its gradual trend higher in April, with both foreclosure starts and completed foreclosures posting annual gains, said Rob Barber, CEO of Adam. While overall filings declined from previous month, the year-over-year increase suggests lenders may be working through distressed inventory as higher borrowing costs and affordability challenges impact some homeowners. Even some foreclosure activities remain significantly below pre-pandemic levels. So they're saying that the activities are below pre-pandemic levels. So they're saying it's not as high as pre-pandemic levels, but there's a gradual uptick of what's happening foreclosure-wise. So like I said, be very mindful of what's happening around your area when it comes to the housing market. And I guess we'll circle back around to this question again: mortgage rate spike, housing market trouble, right? Are we in trouble housing market wise? Again, it depends on where you're at in the country. Like I said, I'm in this metro Atlanta area. A lot of people, even though they don't want to admit to it, a lot of people are in distress. And it might not be as many homeowners, but I'm noticing that we get a lot of foreclosures when it comes to these local mom and pop investors, and even some of these bigger corporate investors. Some of them don't pay their taxes either. So they'll get on like the foreclosure lists that I look at. They'll jump on them, and then by the time you get to the steps downtown in Fulton County on Pryor Street, by the time you get down there, they'll because you have all the way until the day of, even up to the moment of, to call off your foreclosure, like claim bankruptcy, pay whatever you got to pay, whatever. So then some of them will kind of get off that list. So, like I said, be mindful of what's happening around you. As far as housing market trouble, there are people going through strains of housing trouble. And so these interest rates spiking up more and more and more is only going to cause, if people don't decide to lower the cost of their homes price-wise, if they really need to desperately sell it, it's only going to cause them to have these carrying costs or these holdover costs that are going to keep going month to month to month, where it's going to create more strain instead of just lowering that price of that home to get you from out under it. A lot of people now are trying to, and I understand, they feel like I bought this house 3 years ago, 4 years ago, and I feel like I put this much of a down payment into it, I put this much of work into it, and I want to make something out of it. And I think it also stems to what social media kind of did with people too, with TikToks and the Instagrams, where they've always told people that you can buy a house today, you can sell it tomorrow, and you're going to be able to get out and make money. Typically, if you're using a real estate agent, there are fees associated with a real estate agent. There are also fees depending on where you live at. You have closing fees, you have the title fees. Every state you have those fees, whether you use a real estate or person or not, right? You can go to a closing attorney, a real estate attorney, whatever you want to do, you're still going to have fees. So the fees might be less, might be higher, depending on the route you take, but there are fees. So if you bought a house a year ago and the market is depreciating, it's going to be hard for you to get out regardless. So we have to be mindful, if you are currently trying to sell your house and you know you're in a situation where you need to get up under it because of life circumstances, do not try to overprice your house in a market that might be declining depending on where you're at. Make sure it makes sense so that way you can get out of it. And at the same token, I understand if people feel like, I want to get thousands of dollars out of my house. If there's no equity there, you can't get anything out of it as far as six figures. Maybe you might walk away with 5,000. I don't know. Maybe you might get lucky, walk away at 10,000, depending on what's going on. But be very mindful on the seller side when you're trying to sell in the market, depending on how it's shifting in your area. On the buyer side, as far as housing market trouble, if you're a buyer right now, depending on where you're at, I wouldn't go in buying a house in a market that's shifting right now without understanding the full context of the trend happening in that area. So just talk to your local real estate professional and say, hey, can you give me the scoop as far as like what's going on, where you kind of see that market trend going? Are houses declining, and what magnitude, what percentage if possible, if they can kind of create that? How long are these houses sitting on the market? Also, are you willing to look on the back end and let me know what could possibly be going on back end? Like with most of my clients, I think I always kind of look on the back end, like, and they can text me too, say, hey, can you tell me what's going on in the back end with this situation? And I'll say, oh, it looks like this person is in foreclosure. Oh, it looks like this person refinanced. It looks like this person has a second mortgage. It looks like this person, you know, this is an estate sale, or it looks like this is a bankruptcy claim. And so we can kind of figure out what the financial strain is there and how willing are they to sell at a certain price point. Even though some people still, when they're going to do through distress, as mentioned, they still try to oversell just because they want more money out of it. But which turns into that factor of greed and capitalism in America. But it's just being mindful right now, you guys. So housing market trouble, sellers, if you don't price right currently, you will be in the trouble if you're trying to get out of it and you just bought within the last couple of years. I don't think there's going to be a lot of corporate investors. I don't think there's going to be a lot of local investors that are going to jump into the market now and just be buying houses just to buy a house like they were before. So you're going to start kind of lose that pile of people right there. And then, of course, with these home buyers with the higher interest rates, you're going to lose some of those people there. So we got to be very mindful. And on the buyer side, when it comes to mortgage rates spiking up, talk to your financier. Make sure with these rates spiking up that it didn't change your current rate that you might have. And then also, because the rate can also change your loan value as far as what you can use, with your purchasing power per se in that loan. So have that conversation with your lender, and also when you're talking with your realtor, so you don't get in any housing market trouble. Just make sure you're understanding what's happening in the area and the trend, and understanding that back end. But needless to say, I appreciate everybody being here this Sunday night. Always taking your time out to join me over here. If you're new to the channel, please don't forget to subscribe to the channel. Also hit that like button, so that way if you like videos that talk about real estate, you will actually get other ones that will pop up in your algorithm just because you hit the like button. And it'll also allow us to be seen in the algorithm so more people can join us over here on these lives to have these open conversations around real estate. And if you are watching the video afterwards and you see a shooting star underneath of it, it's called a hype button. Don't forget to hype the video, because it also does the same thing as a like button, but to a bigger magnitude. But I appreciate everybody being here tonight. Kotex, Sita, Miss H, my dad, Croy, Lang, everybody who joined in the conversation tonight, Miss H. I appreciate everyone, and those who are watching as well. I appreciate you coming in to just engage in conversation and listen. But have a great Sunday, and I will see you guys next Sunday, 7 p.m. Eastern. Bye-bye, you guys.